What's up guys, Alvaro here and welcome to the Bilingual Stock Market channel again. On this channel we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update, so I want to break down some technicals going over S&P 500 and the Nasdaq 100, but also breaking down from a technical standpoint 4 stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And today we had a green day all across the board. It looks like the bulls are taking over once again the markets. And there is something that is worth pointing out in the case of the S&P 500, and I am going to break down this index from a technical standpoint in just a second. But guys, the volume of the S&P has been decreasing since last Monday, which was a day in which we saw a massive sell-off in the S&P 500. So, for the most part, when you guys see that an index goes up, most of the time, most of the indices pull up on low volume. So the fact that the volume of the S&P 500 has been decreasing may be signaling that the S&P and the markets in general terms are running out of sellers, which could be a sign that the bottom is in, that this little process of correction or this little pullback that we have seen in the last 2 weeks maybe got to an end, guys. That might be the case. So the best performing sector today was Russell 2000, which went up 1.82%. Nasdaq went up 1.04%. Dow Jones went up 1.48%, and the S&P 500 went up 1.21%. And if we take a look at the sectors that trade inside the S&P 500, the best performing sector today was the energy sector, which went up 3.50%, whereas the worst performing sector was utilities, going down 0.52%. Keep in mind that the utilities sector is a sector that usually outperforms the markets when we have negative days. So the fact that the utilities sector is lagging is also a bullish sign for the markets, because this is for the most part a defensive sector, a sector that most people look for, or that most investors invest in when there is fear out there. However, guys, and as I just said, the best performing sector was the energy sector, but really, the two sectors, in reality, the two sectors that did the heavy lifting today were the financial sector, which was the second best performing sector today, going up 2.45%, and the tech sector, which went up 1.33%. I have also told you plenty of times here on the channel that whenever these two indices go up, we are very likely to have a massive green day in the markets. However, there is something that happened today that caught my eye. Take a look at the 10-year Treasury yield. It went up today 0.101%. So this is something that we need to keep a close watch on, because the 10-year Treasury yield was trading below 1.3% since, I don't know, when was the last time that the 10-year Treasury yield was above 1.4%. So let me take a look at that. So that was, guys, back in, let me see over here. So since mid-June, we hadn't seen the 10-year Treasury yield trading above 1.4%, and that's a reason why the financial sector had such an amazing day today, going up 2.45%. Keep in mind, guys, that the 10-year Treasury yield is for the most part an inflationary indicator, or an inflation indicator. Let's just put it that way. So the fact that the 10-year Treasury yield is going up is a bad sign for the tech sector. The tech sector went up today. We had a very solid day as well in both the Nasdaq 100 and the Nasdaq. but we need to keep a close watch on the 10-year Treasury yield. If the 10-year Treasury yield happens to burst above 1.5%, that is going to be very negative for tech-oriented stocks, growth stocks, and higher multiple stocks in general terms. So as of now, this is something that we need to keep a close watch on. We don't have a red flag over here yet, but watch out for the 10-year Treasury yield, because as I just said, guys, this is an inflationary indicator, and watch out for the 10-year Treasury yield. If this yield keeps on going up, as I just said, we are very likely to see the tech sector under pressure, and on the flip side, the financial sector outperforming the markets in general terms. And before going over the S&P 500, I want to show you two trades that I closed in today's trading session, and let me show you Hood, guys. In the case of Hood, I purchased 100 shares at $44.25, paying $4,425 back on September 3rd, and today I finally sold out of these 100 shares at $47.72, and I was paid $4,772. So I ended up making over here a $297 profit. Nothing to complain about. And another trade that I closed today was on Capital One. So this was a financial play for me. I was expecting, the financial sector was very oversold, guys. So I was expecting a bounce back up of the financial sector. So I picked up 50 shares of Capital One back on September 2nd at $160.75, paying $8,037, and I sold out of these 50 shares today at $164, almost $165, guys, because I sold out of these 50 shares at $164.81, and I was paid $8,240. So I ended up making over here $203. So I can't complain, guys. Today I made $500 closing these two trades. So it was a very good day for me. So I ended up having two base hits, but base hits are the ones that put you in the Hall of Fame. And by the way, guys, I forgot to tell you this. Today we had jobless claims coming out at 351,000, an increase from 16,000 a week before, and way worse than the 320,000 estimate. As of now, the markets aren't paying much attention to the jobless claims reports that we have had recently. However, keep in mind, guys, that the chairman of the Federal Reserve said yesterday that they are going to start to increase the interest rate once we have full employment all across the US. And the amounts of people that are signing up for employment benefits actually increased last week relative to the week prior. So that is something that we also need to keep in mind. Okay, now let's go ahead and take a look at the S&P 500, which, as I just said, went up today 1.21%, and it closed today's trading session at 4,448 points. So if tomorrow, guys, the bulls of the S&P can take on this 50 SMA on the 4-hour chart, and at the same time, they can burst above 4,474 points or 4,474. This is going to be good night ironing for the bears, no doubt about it. So it is going to be critical for the bears, preventing the bulls from bursting above 4,474 tomorrow or in the course of the next trading sessions. If we take a look at the relative strength index of the S&P, it is at 54 points. So it is the S&P is looking very healthy from a technical standpoint. It is neither oversold nor overbacked. So a push higher tomorrow, guys, or maybe on Monday, and by doing so, bursting above 44.73 is pretty much in the cards. So in terms of overhead resistance, the most important spot for the bulls tomorrow is going to be 44.73. Keep in mind that 44.73 It's a previous area of lower support that already acted as such for the bulls of the S&P back on August 27, and it also did it back on August 26th, but we are also talking about a former area of overhead resistance in which the bulls of the S&P failed back on August 16, and obviously this is also an area that turned into a new all-time high for the S&P 500 back on August 16. Once the bulls of the S&P had taken on this 50 SMA on the 4-hour chart and 44.73, then the next task is going to be taking on 4,500, which happens to be a fat number and also happens to be a former area of overhead resistance in which the bulls of the S&P failed back on August 25th. And in terms of support, if tomorrow we happen to see some sort of pullback in the S&P 500, the main area that we need to keep a close watch on is going to be 4440. 4,440 points, which happens to be a previous area of support that already acted twice as such, but we are also talking about a former area of overhead resistance in which the bulls of the S&P failed on 1, 2, and 3 occasions before. So everything is looking very bullish for the bulls in the S&P 500. However, the ultimate hope for the bears of this index would be preventing the bulls from taking on 44.74 and maybe start to bring down the S&P 500. But as I just said in the introduction of this video, the volume, guys, of the S&P has decreased significantly since last Monday. So I think that we are running out of sellers, and maybe the worst of the little correction process that we have seen during the last 2 weeks is gone, and that's it, guys. But we still need to wait for the bulls of the S&P to burst above 44.74. And in the case of the Nasdaq 100, this index went up today 0.92%, and it closed today's trading session at 15,316 points. So let me zoom in here on the 4-hour chart, and in the case of the NDX, the next important task for the bulls of this index is going to be taking on 15,400 points. 15,400 points acted as support on 1, 2, 3, and 4 occasions last week, but we are also talking about a former area of overhead resistance in which the bulls of the NDX failed on August 25th, and they also failed on August 24. If the bears want to be back in the game in the case of the NDX, they need to break to the downside 15,150 points, which happens to be a critical former area of support and resistance, and by doing so, they would be also breaking down to the downside this 180 SMA on the 4-hour chart. So clearly, guys, the next 2 or 3 trading sessions are going to be very important in technical terms in order to define what direction the Nasdaq 100 is going to be picking. And if we take a look at the relative strength index of this index, it is at 52 points, very healthy from a technical standpoint. And as I just said, in the case of the S&P, the Nasdaq 100 is neither oversold nor overbought. Therefore, a push higher through which the bulls of the Nasdaq 100 would be potentially able to burst above 15,400 points is very likely. It could happen tomorrow. So if the bulls of the Nasdaq 100 take on 15,400 points, and taking into account, as I just said, that the relative strength index of the NDX is at 52 points, I think that they are going to be absolutely able to fill the next gap up to 15,500 points. So for the bears, it is imperative, guys, in the next trading sessions to break 15,150 points to the downside, because, and as I just said in the case of the S&P, if the bulls of the NDX happen to take on this 50 SMA on the 4-hour chart, that's it, guys. Good night, Irene. The tiny correction or the tiny pullback or whatever we want to call it is over. And now let's go ahead and take a look. It's going to be over. Now let's go ahead and take a look at Sofi. And in the case of Sofi, the stock of this company has been on an absolute tear Today, Sofi went up 1.78% and it closed today's trading session at $17.14. And take a look at the relative strength index of the stock of this company. It is at 72 points. Sofi is, as of now, very overextended. So the bulls of Sofi are about to make a test of a very important area of overhead resistance at $17.60. $17.60 is a previous area of overhead resistance in which the bulls of Sofi failed back on August 12th. They also failed back in the beginning of May, also back in late April, and we are also talking about a former area of lower support that already acted as such for Sofi back on February 25th. Can the bulls of Sofi burst above $17.60 with the relative strength index of the stock of this company being at 72 points? It is very unlikely. This is not a trade in which I am willing to be involved with. However, if we happen to see a pullback, which I think the stock of this company is absolutely due for, I think that Sofi should pull back either tomorrow or maybe on Monday, the latest. So if Sofi happens to take a rest and pays a visit down to a former area of overhead resistance and support at $16.50, in that area, guys, I am going to be tempted in order to pick up some shares of Sofi. So $16.14 is a previous area of overhead resistance in which the bulls of Sofi failed back on July 28th, but we are also talking about a former area of lower support that acted as such back in late March. So if I am able to pick up some shares of Sofi near $16.15, sorry guys, and if I can sell out of those shares at $17.63, I could be making an 8% profit. This would be a phenomenal profit. So watch out for Sofi paying a visit down to $16.10 because I believe that the stock of this company is due for a pullback. And the second stock of this video is going to be Blackberry. And guys, a few hours ago, or at 3 p.m. or 2:30 p.m. Eastern Standard Time, I listened to an interview that was carried out on CNBC to the CEO of Blackberry. And before having listened to this interview, guys, I was thinking that Blackberry was a cell phone manufacturer, but that is no longer the case, guys. So the CEO of this company said during that interview that they are, as of now, a cybersecurity company. That 60% of the revenue that BlackBerry is making as of now comes from cybersecurity software, or it comes from sales of cybersecurity software. That was kind of mind-blowing. I gotta admit that. So this is no longer a cell phone manufacturer. And BlackBerry reported earnings yesterday. So let me see if I can tell you guys what happened with the earnings report of this company. So adjusted EPS came in at negative. This is a company that isn't making any profit as of now. So adjusted EPS came in at negative 6 cents, beating the estimate of negative 7 cents. And sales came in at $175 million, beating the $163.5 million estimate. So they beat on earnings all across the board, guys, on both EPS and sales, and therefore the stock of this company had a decent day today, guys. It went up 10.88%. It actually did pretty well, and it closed today's trading session at $10.60. And guys, the fact that this company is no longer a cell phone manufacturer makes me feel a bit more comfortable. Let's just put it that way, in order to take a position or to take a trade on BlackBerry. So we have a very important area of lower support for the stock of this company at $10.50. $10.50 is a previous area of overhead resistance in which the bulls of BlackBerry failed back on August 12th, and they also failed back on July 29, but we are also talking about a former area of lower support that acted as such back in mid-March, and it also did it back in early February. And let me zoom in here real quick, guys, because we have the 50 SMA that maybe it could be potentially crossing above the 180 SMA on the 4-hour chart. As of now, we can clearly see over here a death cross. You guys can see the 50 SMA that crossed below the 180 SMA on the 4-hour chart. But now, and since Blackberry obviously went up today 10%, the 50 SMA could be telling us that it could be potentially crossing above the 180 SMA on the 4-hour chart if Blackberry keeps on going up. So watch out for this potential golden cross that could be unfolding in the course of the next days. So if tomorrow, guys, I happen to see Blackberry consolidating slightly above the area, the previous area of support and resistance that I just told you about, so slightly above $10.50, I am going to be tempted in order to pick up some shares of Blackberry, guys, because in that case, that could be a sign, and needless to say, if Blackberry starts to consolidate slightly above $10.50, it is going to be trading at the same time slightly above the 180 SMA on the 4-hour chart. So this could be a sign that the bulls of the stock of this company are gathering momentum in order to make a push higher and maybe fill the gap up to the next important area of overhead resistance for the stock of this company at $13. $13 is a previous area of lower support that already acted as such for Blackberry back in early June, but we are also talking about a former area of overhead resistance in which the bulls of the stock of this company felt back in late February, and they also failed back in mid-February. So take a look at this, guys. If we pick up shares of Blackberry, let's say at $10.60, $10.70, and if we sell out of those shares at $13, we are looking at a 16% profit. That would be a very, but very solid profit. And if we take a look at the relative strength index of the stock of this company, it is at 62 points. So we can make the case that the bulls of Blackberry can make this push higher and maybe fill the gap up in tomorrow's trading session or maybe in the course of next week. So watch out for Blackberry trading slightly above $10.50. And now let's go ahead and take a look at SmileDirectClub, ticker symbol SDC. The stock of this company went down today 2.56%, and it closed today's trading session at $6.10. And let me show you guys, because I am holding the bag over here, so you can make sure that I am not only showing you guys my winning positions. So I own 250 shares. This is my second trading and investment portfolio, by the way. Here I own 250 shares at an average cost of $7, and as of now I have an unrealized loss of $222. But I'm thinking, guys, because needless to say, I couldn't care less about that unrealized loss that you just saw in that position. So I'm thinking, guys, about opening another position on a SmileDirectClub, because I really like the technical setup that I am seeing on the 4-hour chart. So $6.10, and mind you, by the way, the stock of this company, I haven't said this, the stock of this company went down today 2.56%, and it closed today's trading session at $6.10. So $6.10 is a very interesting spot in order to pick up some shares of a SmileDirectClub. We are talking about an area of lower support that acted twice as such 2 or 3 days ago, but we are also talking about a former area of overhead resistance in which the bulls of the stock of this company felt back on August 30th. And on top of that, this previous area of support and resistance is being backed up on the 4-hour chart by the 50 SMA. So if tomorrow, guys, we see a SmileDirectClub starting to consolidate slightly above $6.10, that could be a buy, guys. I really like the technical setup that I am seeing over here. So if we pick up let's say, some shares of SmileDirectClub, I don't know, 200 or 300 shares of the stock of this company at, let's say, $6.18. And if we are able to write them up to the next important area of overhead resistance at $7.30, sorry guys, we could be locking in a profit of almost 15%. That would be a phenomenal trade. And in the case of the overhead resistance that I just told you about, $7.20, we are talking about a former area of overhead resistance in which the bulls of the stock of this company felt back in early August, but we are also talking about a former area of lower support that acted as such back in early July, and it also did it back in early May. So watch out for SmileDirectClub, because the fact that the stock of this company is trading slightly above the 50 SMA on the 4-hour chart, and at the same time trading above a former area of lower support and overhead resistance, is a very positive sign that could be telling us that the bulls of the stock of this company are gathering momentum in order to make a push higher. And the last stock of this video is a stock that is making a lot of people suffer, guys. Workhorse Group. Workhorse went up today 2.16%, and it closed today's trading session at $7.57. And in the case of the stock of this company, it collapsed yesterday on bad news, because I think that they are recalling some of their electric delivery trucks. Let me see. So they are suspending production, and they are also recalling something like 30 units or 45 units. Here we have the news. Let me see. So, electric vehicle company Workhorse Group said Wednesday it suspended deliveries of its C1000 vehicles and recalled 41 units after determining that additional testing and modifications are needed to certify them under U.S. federal standards. So that's a reason why the stock of this company took a big hit yesterday. However, the dip was backed, and Workhorse went up today 2.16%. So let me zoom in here on the 4-hour chart. And guys, I think that you guys can tell that most of the technical setups that I am looking for as of now are technical setups based on consolidation, because we have a bunch of stocks that are way off its highs, and they are very close. They are getting close, let's say, to very important areas of lower support, that if those areas happen to be broken to the downside, then we could see huge legs down. So I am being very careful with that. And before taking any trade, I want to see consolidation slightly above important previous areas of support and resistance. That's why I have been telling you guys throughout my latest videos that I am starting trades once I see a good process of consolidation slightly above, as I just said, important areas of support, of slightly above former areas of support and resistance. And in the case of Workhorse, the stock of this company wouldn't be the exception to the rule. So guys, take a look at what happened yesterday. So once the bad news came out, Workhorse fell off a cliff, but take a look at the spot in which the bulls of Workhorse managed to find support at $7. $7 is a previous area of lower support that already acted as such for the stock of this company back in May. So the fact that the bulls managed to find support at a previous area of lower support that acted as such a few months ago, that is a good sign, guys. I think that the markets, or that the bulls, are drawing a line in the sand for the bears of Workhorse. They are saying, hey, Workhorse isn't going any lower than $7. So I think that if tomorrow, or if in the course of the next trading sessions, we start to see a process of consolidation of Workhorse slightly above $7, somewhere between $7.20 and $7.50, that could be signaling, guys, that the bulls of the stock of this company are gathering momentum in order to make a push higher and maybe fill the gap up to the next important area of overhead resistance for Workhorse near $9.40. $9.40 is a previous area of overhead resistance in which the bulls of Workhorse failed back in early September, and they also failed back on August 17. But at the same time, we are talking about a former area of lower support that acted as such back in late May, and it also did it back in early May as well. And on top of that, near this area at $9.40-ish, we have the convergence, the coincidence of the 180 SMA on the 4-hour chart. So whenever the bulls of Workhorse make a push higher, we can expect this area around $9.30 to provide a huge resistance. So let's say that we pick up some shares of Workhorse at $7.50-ish, and if we sell out of those shares at $9.45, we could be making a 20% profit, guys. So that's a very solid profit. That's nothing to sneeze at. And if we take a look at the relative strength index of Workhorse, it is at 35 points. Very, but very healthy from a technical standpoint. So I don't think that Workhorse is going to go any lower than $7. And a process of consolidation could be a green light in order to start a position on Workhorse. And with Workhorse, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you once again on Sunday, because we also post stock market videos on Sundays. So you guys have a great weekend. Peace out.